Hi, my name is Audrey Colbert Lovell, and welcome to my education series, Lunch and Learn, this week on FHA. The FHA Basics are that it is a 1 to 4 unit primary residence, manufactured homes, single-family homes, duplex, condos. We can do rehabilitation loans, which is the purchase price plus the rehab cost, construction loans. They're backed by the FHA, the Federal Housing Administration, so it is a government-backed loan. It has low down payment requirements as low as 3.5%. It generally has better rates than conventional. They're more lenient with credit, and it has lower mortgage insurance in some cases when it comes to lower credit qualifiers, meaning than conventional. We're comparing between FHA and conventional here. So some of the pros for the FHA loan type as compared to the conventional loan type are that it does allow for an earlier purchase of a home after bankruptcy. So conventional loans do require 4 years after the discharge date they have to wait, whereas FHA loans are 2 years after the discharge date. So that can help get a buyer or homeowner into a home faster. FHA loans also have lower credit standards than conventional. For FHA, you can go as low as 500 with certain circumstances. So from 500 to 579 credit score, it is a requirement of 10% down, but there still is that option for lower credit borrowers. Also, with a 580 credit score and up, it is the 3.5% down. So conventional is traditionally 620 and up. So with FHA, it does allow lower credit standards. Also, better debt to income ratios. So with compensating factors, people with an FHA loan, borrowers can qualify even up to 55% debt to income in some scenarios. Lower mortgage insurance with FHA. So lower credit borrowers, if they're trying with a 620, for example, with a conventional loan, they'll have higher mortgage insurance than they will with FHA. FHA will give them lower mortgage insurance rates. And also, FHA does offer the 203K program, which is the rehab loans. So somebody can purchase a home and have the limited program, which is the renovations from $0 to $35,000 included in the cost, or regular, which is from $5,000 on up, full renovation loans allowed with the FHA program as compared to the conventional program. So some of the cons for an FHA loan are the mortgage insurance. Because they do take riskier credit or lower credit, they do require mortgage insurance. And if the buyer puts down the minimum of 3.5% down, the mortgage insurance will never go away. So on a conventional loan, once they get to the 80% loan to value, the mortgage insurance will drop off, but with FHA, it will never go away. That can be substantial, $100 to $200 a month that will never go away on that loan. Also, the mortgage insurance for FHA, there is an upfront charge for mortgage insurance, which is $1.75. That is rolled into the cost of the loan, but that's an added fee also for an FHA loan. The purchase type for FHA is only primary residence, whereas conventional will allow for second homes or investment. The FHA loans do have county loan limits that's lower than conventional, so there is a limit on the amount of home you can purchase per county. And then also the condo purchases for FHA loan also goes through a more rigorous standard, so they have to be approved through FHA also if somebody is purchasing a condo. So most people only think of FHA as one type of loan. So let's clarify the different types of FHA loans out there. There is the 203B, which is the traditional. It does require it to be a move-in ready home. There is certain standards on the appraisal that must be met, such as certain types of appliances must be in, the home must be actually move-in ready. The inspection or the appraisal must pass the FHA standards. A second type of FHA loan type that might not be as well known is the 203K program. So like I mentioned before, this is the renovation and repair program, which can go from small repairs all the way up to a full gut, tear down all the way to the foundation. There are rules. You cannot install a brand new swimming pool. You can repair a swimming pool. And then there's a multitude of different items that can be included, such as septic systems, adding a fence, energy improvements, buying appliances, etc. And then the third FHA program, which is rare, but it is something that is offered, is a 203H. This is for disaster victims. If somebody's home was destroyed by a natural disaster, they could be eligible all the way to a 0% down payment through FHA with their disaster program, the 203H program. Once again, FHA does help low credit borrowers to achieve home ownership sooner than they would with a conventional. It helps for lower credit scores. It gives better interest rates in a lot of situations for those clients. And it does offer that lower down payment, which sometimes is needed to help people with their home ownership and to get started with their first home. Well, thank you again for attending my education series today. If you have any questions or want to learn more, please feel free to reach out with my information on the page for any questions that I can help you with. And thank you again. I look forward to talking to you guys soon.